U.S. nat gas prices fell on Friday, pressured by forecasts for warmer than average November weather, robust storage levels, and stable production rates. Prices have now dipped below 50-day moving average support, reflecting a bearish outlook as traders brace for subdued heating demand through mid-November. Although demand for liquefied natural gas remains steady, the combination of abundant supplies and lower heating needs is keeping a lid on the market. On Friday, the weather models adjusted the forecast by 11 HDDs lower, which decreases the immediate need for heating-related gas. This shift points to mild conditions across much of the country, particularly in the eastern and southern regions, where temperatures are expected to hover between the 60s and 80s Fahrenheit, with isolated areas even reaching the 90s. In contrast, cooler temperatures in parts of the western and central U.S. will bring highs in the 40s to 60s Fahrenheit, though this will not significantly offset the mild conditions prevailing elsewhere. The overall demand profile remains light, as warmer weather patterns weaken market sentiment for natural gas futures in the near term. Natural gas inventories are projected to increase by 120 BCF during the 4 weeks from October 26 to November 22, a bearish 105 BCF larger than the 5-year average. If the projection holds, natural gas inventories would reach 3,983 BCF, expanding the current storage surplus against the 5-year average from 178 to 283 BCF. The storage surplus outlook now appears quite bearish for this winter, with the surplus only expected to diminish by season's end. However, this projection assumes a typical winter, leaving room for a colder than normal start to quickly alter this imbalance. Adding to the bearish sentiment, gas companies are continuing to raise the rig count ahead of the high demand season. On Friday, the U.S. gas rig count rose by 1, bringing the total to 102, up from 101 the previous week. Given the ongoing mild weather forecast, elevated storage levels, and lack of significant demand increases, the short-term outlook for U.S. nat gas prices remains bearish. Until colder temperatures become a more prominent factor in November, prices may struggle to rally. However, the risk of escalation in the Iran-Israel conflict remains high. Tensions are rising as Iran considers its response to Israel's recent attack. Iranian Supreme Leader Ayatollah Ali Khamenei has issued a warning to Israel and the United States, promising a crushing response to any actions against Iran and its allies, according to state media. From a technical perspective, the market has fallen below the 50-day moving average support at $2.38, turning this level into a significant resistance point. At the same time, gas prices have so far held above the $2.20 support level, suggesting continued consolidation around this range. Until colder temperatures become a more prominent factor in November, prices may struggle to gain momentum for a rally. The $2.20 level also offers a favorable entry point as we approach peak demand season, where an influx of bullish traders could step in, potentially sparking upward momentum. Please like, subscribe, and comment to support the channel. See you in the next one.